Bitcoin is crashing. There's no doubt about that. Easy to see now in hindsight, of course. So the question is, okay, so now that Bitcoin has been coming down dramatically, what do we do? What do we do at this point? What do we do in real time? So I want to share with you a few thoughts about that, and let's get this party started. So I want to show you here this particular tool that I think is rather interesting. And so what you'll see here, let me point out the, here, let's do this. So here's the website, not my website, by the way. So you can go there, just Google that. In fact, if you just Google rainbow or Bitcoin rainbow price chart, it'll come up as one of them. Notice too that this is a log scale. That's very important. Now, the point of this is we've got this rainbow. It's called a rainbow chart, as you can see. Down here are the dates. So where are we right now? Well, right now, of course, we are right at this, right into the bottom of this rainbow. And as you can see, this has held up pretty well in the past as the markets come into that blue zone. Here we stayed, and this is important too, that here we just kind of touched the top of the blue zone, and then the market went up, Bitcoin. Here we went out to the bottom of the blue zone, and then look, we rode to the bottom of the blue zone for a while, but price still went up. Okay, here we went into the blue zone, price went up. Here we got a little below, outside of the whole rainbow, just a smidge, and then price went up, and that's where we are right now. Okay, so talk about timing, what's going on right here in this moment, not hindsight, but, looking in real time, what are we doing here? All right, so we're back into what maybe a lot of people would call oversold zone. I don't really like using that term, but based on this historical model, that's where we are. Now, what you think of this historical model, that's totally up to you, but I wanted to point this out because it is, well, it is timely. It is timely. Now, basically, when you get into this blue zone, and by the way, here's your little thingamajiggy. That's the official technical analysis term, by the way, thingamajiggy, of what these different colors mean. All right, so, and they bold this right now, and they make it in larger font. Basically, a fire sale. Basically, a fire sale. Well, that sounds pretty good. All right, so based on this model, and of course there's many models, this could be a time where well, I'm not going to say what you'd want to do, but again, based on this rainbow chart, this logarithmic model, that we are getting into a very important area. Now, one other thing I want to point before we move to another chart that I want to show you is the halvings. So the halvings, Bitcoin halvings right here, that's also been a time when Bitcoin has often moved up out of these halvings. Actually, let's go all the way back to this one. And if you don't know what halving means, I'm not going to explain it on this video. We're going to keep this under 10 minutes, so one topic at a time. But it is important to point out because here we were into the blue zone during a halving. Here we're in the blue zone during the halving. Here we're in the blue zone just a little bit before the halving and coming out of it. Here we are not. So that's what's different about this one. The halving doesn't come back in here for another, year and a half or so. So that is different. That's a variable, all right, that we haven't had before. So that's one area where the model may break down. Okay, let me bring up another chart and let's do some comparison here. Now I've switched over to a regular chart. This is not a logarithmic. It is just actually the price of Bitcoin. But we're looking at the 1 week chart. So this is the weekly chart. Each bar represents 1 week of data. And the most important thing here on the weekly is, and a lot of people are looking at this right here, this purple line or plum, maybe to be more specific, that's the 200 period simple moving average. So a lot of people are looking at this, and the reason they're looking at it is because, well, it's a moving average that a lot of people use, number one, so it often has a self-fulfilling prophecy, but also, again, in history, the market has bounced off of it here and here. So now very important to recognize that past performance does not equal future results. So that's important. Now, the only other aspect of it is, like I say, it can be a self-fulfilling prophecy, whereas even though that doesn't mean that Bitcoin is going to bounce off of this, lots of people are looking at it. Therefore, a lot of buying may come in if enough people. It's all about supply and demand. Right? And so it's nothing magical about the 200 simple moving average. It's just a matter of, will a lot of people use this as a technical analysis signal to get in? Okay, so maybe they will, maybe they won't, but it's important to acknowledge that. And it's accompanied by a lot of volume coming in, big volume spike here. And as you could see previously, again, now these volume spikes don't necessarily align with one bar, but there was a big volume spike here that came in at these lows, big volume spike that came in here during these lows. Volume spikes can also, by the way, accompany highs and be blow off tops, but obviously we're not at a high here. We're coming in at lows, and we can't say it's the low, but it's the market's obviously been cranking down dramatically for quite a while. In fact, from the market has cut its price by 2/3. So that's significant. That's a lot, much more than the S&P 500. So, for example, the stock market is down over 20%. So, therefore, that's considered a bear market. Well, we're down way more. So, the relative performance of Bitcoin to the S&P 500, for example, is dramatically worse. But not surprising, it's a much more volatile market, doesn't have as much professional participation, and that can lead to a lot of volatility. We'll come back to that point here in just a moment. All right, so there's another piece of evidence that perhaps we're starting to come into a bottoming or a very low price. And let's move to one more chart here, and then let's draw some, I don't want to say conclusions, but have a little discussion about possibly how to manage this. And finally, we'll end with the daily chart of Bitcoin. And on the daily chart, by the way, right there, one day, we see we've got a horizontal support line. What is that? Now, that's another piece of uncorrelated evidence, not correlated to the 200 SMA on the weekly chart. And what that is, if we go all the way back, we got to go back quite a ways. And where it is being drawn off of is this low over here. And that's what these blue horizontal lines are, is they are major previous swing highs and lows. So it's squeezed up here a lot, obviously. So that is a long time ago. We are coming in to a low that happened all the way back in 2020, 2 years ago. So, yeah, lots have happened since then, and now we're all the way back down, giving back 2 years, almost 2 years of price activity. All right, now you could also, by the way, look at this low here, and let's just, again, be totally transparent. Okay, then you got these lows here, then you got those lows there, and that's why you've got all these blue lines. These, by the way, are one of my custom indicators that are automatically drawn based on an algorithm. And so the reason there's a lot of blue horizontal lines here is because, well, Bitcoin spent more time way down here historically and hasn't broken those levels than it did up here. In the past, there were horizontal blue lines up here too, but they've all been broken to the downside now, and so the algo automatically removes them. So how significant is that? I wouldn't say that's as significant as the 200 SMA on the daily or on the weekly chart. But what is interesting is if we look at other previous lows, like here we had the lows coming in there, and then Bitcoin did consolidate at that level. So Bitcoin does watch the previous major swing highs and lows. Again, doesn't mean it's going to bounce off of it, but it does. The market when I say Bitcoin, right, it's really the market participants, people trading Bitcoin. What do they do? And people notice this stuff, and then it creates some uncertainty, and then it just depends on how the sentiment is at that moment. And so it created uncertainty, market went sideways for a while, and then finally the participants said, nah, we're still bearish. And it went down, and now we're at this next level. So what's the sentiment going to be here? Again, please notice, big volume. Oops, let me get my drawing tool up here. Big volume, okay, which could indicate a low, but we had a big volume spike over here at this low too, and it just went sideways. Oh, one other thing here on this daily chart that I wanted to point out that is kind of important. I think it's very important anyway. Bollinger Band squeeze. So we had a Bollinger Band squeeze, and it rode the Bollinger Band down and then ran into the support. Last time we had a Bollinger Band squeeze was here. Again, same thing happened, went down, and then it consolidated. So a couple of scenarios could be, it's always possible that the market careens down through here. It's possible we could consolidate and then go back down. Now, if it goes back down, we're looking down into the area of, roughly, and by the way, don't consider these lines to be lines, consider them to be zones. Don't look at the pixel on your monitor to get that, microscopic with it. But they're zones, and so, somewhere here around 10,000 or so, 10, 9, even 9,000 and so forth could come in within that zone. So how do we manage this? Well, we do not. So there's a couple of things that I do as a trader. Number one, I look at structure. So everything we've looked at so far, I consider market structure or chart structure. So that has to do with price action, support resistance, volume, Bollinger Bands would be part of that. All of that is the structure of the chart. The other thing then that I look at is I look for money flow. So what happens with the money flow when we get to these structural significant levels? So money flow, obviously part of that would be volume as well. But I really need to see a shift in supply demand. Volume alone is not enough for that. So because volume could be a bid, it could be an ask. So are we going to see a shift from bearish sentiment to bullish sentiment? I'm not seeing that yet. Right? That part of the equation I'm not seeing here yet. So to get really bullish, I personally would like to see that. Again, this is not investment advice or trading advice specifically for you. But we've obviously, given back 2/3 of the price of the high. So one thing that some people might look at here is maybe dollar cost averaging into it. Now, that's not a trading strategy. That is an investment strategy where, and people do this with the stock market sometimes. It's best if you have a long-term time horizon. This is best for people who are 18, 19, 20, or younger. And they just dollar cost average into the S&P 500, for example, for their whole lives. And that, by the way, dollar cost averaging means you just take a certain amount of money that you set aside. You say, okay, I'm going to put $100 a month or $1,000 a quarter or whatever it might be. Works great in retirement accounts. And you just keep putting in a certain amount into a low cost index fund like the S&P 500, and just do that over the course of your life, and you get usually a really nice return, at least historically, but it is a long-term strategy. And one of the best times to do it, though, and there's no timing involved in that strategy, just so happens we are in a very low range relative to the last year and a half, and so this could potentially be a good time to start that dollar cost averaging if your time horizon is long-term, minimum 5 years, I would say. The halving, by the way, occurs every 4 years. So that's one thing. Now, another aspect of this that I wanted to mention is, well, can we make that even better? In other words, if we're going to be dollar cost averaging in, okay, we've got to understand and accept that, yeah, the price could still keep coming down. Well, the good news is if you're dollar cost averaging, that means you're bringing in more money and you're buying at, maybe next month and the next month and the next month. So if prices continue to go down, you're continuing to buy at lower prices. And that's where the term comes from, is that your average price of your total position when the market finally does go back up, it's going to be, favorable actually if the market goes down and your overall cost for that position gets averaged lower if you keep coming in when the market goes down. One more aspect to this: what if you could use other people's money to dollar cost average instead of just taking money out of your own, or combine it with your own money? A couple of ways of doing this would be staking. So staking crypto wouldn't even have to be Bitcoin necessarily. Now, again, staking is a bit risky when it comes to cryptocurrencies. It's typically not FDIC insured, whereas in stocks, you could do something similar, and you could dollar cost average into dividend stocks. So, okay, the price of the stock keeps going down, but you're getting paid on dividends while it's going down. So that's one strategy without actually using margin to kind of hedge or offset the price that's going down as your dollar cost averaging. Another thing with crypto, by the way, is and I've done this, by the way, just for full disclosure, is I have a BlockFi credit card. And so instead of getting rewards in cash or discounts on gasoline or restaurants or entertainment or whatever, with BlockFi, I actually get rewards in crypto, and I can choose whether I want Bitcoin or Ethereum, or they offer several different cryptos. And so when you spend money using their credit card, then you get a certain percentage of that in rewards on the cryptocurrency that you choose. And so again, if crypto keeps going down, you keep getting these crypto rewards just for using the credit card. I pay my credit card off at the end of every month, so I'm not accumulating any debt on that, but keep getting more crypto at lower prices without having to take money out of my own pocket. So if you're interested in that, again, I have a referral link. Full disclosure, yep, it's a referral link. But if you use my link, then you get some extra crypto up front, and I get crypto as well. And we get, I believe it's just matching crypto, extra crypto for using my link. So totally up to you. Again, not recommending the strategy, just sharing with you various strategies, various options and choices that you have if you even want to participate. And I will say on top of all of that, that it is crypto's very volatile, very risky. No one, including myself, knows what's really going to happen here. And so please consult a financial advisor to determine what's right for you at your time in life, how old you are, what your financial standing is, so many variables there. Okay, but these are some things that I'm looking at personally, so I'm sharing them with you. And if you like it, great. If you don't like it, flush it. In fact, I'd love to hear your comments. Give me your opinions in the comments below, and let's see what you guys have to say, because I know a lot of you are very good traders and have a lot of wisdom to share, and I'd be very interested in what you have to say. Again, if you're interested in the BlockFi credit card, my referral link is in the description below. Click on that. You get a little extra crypto for signing up and finding an account. Make sure, by the way, when you do that, make sure you read all the disclaimers on the BlockFi account. Very important that you do that. Okay. Oh, by the way, if you like these videos, subscribe. And I'll be doing some more videos here real soon, and that way you'll get notifications so you don't miss any of my videos. Okay, my friends, have a great rest of the day, a good week, and happy trades.